Good morning, traders. It is Thursday, March the 6th. Taking a look at the charts. Equities this morning a little bit down. We're seeing a little bit more selling carry over. Yesterday in the afternoon update, I talked about how we went into these overbought market conditions. There was another one over here, which you can't see on this gap up because this is a 30-minute chart. And by the end of a 30-minute chart, the FOMO disappeared. But overall, we had FOMO yesterday, again, a much higher level. And of course, whenever we get that, we tend to see the market have some type of pullback. And we had that yesterday, and we're starting to see that pull back a little bit. Well, let's take a quick look. Yesterday, last night, I updated with an evening update, and this was the chart that I shared, which is showing on the 3-minute chart over this is the same time frame over several days. We have these waves of FOMO where everyone piles in, and when people think they're missing out and they're jumping in, they don't care what price they pay. Usually that is a short-term sign. The savvy investors should already be long if they are long in that market based on their strategy. And then these peaks here are usually when everyone piles in and they just have that wave of FOMO. It's a kind of an emotional it's just a big wave of emotion. People just can't control it. They have to get in. And of course, we sell off after that. We had that yesterday. I talked about this. This is the update saying, hey, we should expect some type of pause or pullback on the 30-minute chart. And the daily chart actually shows we have a cycle low. So when we look at the daily chart, this should be a major low starting to form for a bigger bounce. But we need to have this small pause or pull back a little bit first, I think, before we continue with the daily trend, the longer trend up. And so that is exactly what's happening. If we take a look here this morning, we've got, the SP 500 is trading down over 1%, NASDAQ down 1.4%, so is trading down around 5774. So it has pretty much made that move that I drew last night. So it already has had this pullback. It is set to gap lower. As we know, gaps tend to get filled, and the daily chart is pointing to higher pricing for some type of bounce, likely for a couple of days. So we're going to see a gap down at this point, unless the market rallies up before the opening bell. And then we could see this start to carve out a bit more of a base sideways move, choppy sideways, or start to move a little bit higher. So that's where we're at. When we look at this chart again, you can also see we had panic selling on our green indicator. That coincides usually with short-term pivot lows, and this is a significant one because it was at a very high level, way above the 3 level. And we had the VIX spike to like new multi-month highs. Plus we had the put-call ratio up over 1, and we pierced a pivot low that we talked about from January 13th that ran the stops, which caused this huge big drop right through here and all this volume, and everybody bailed out. And of course, they all buy, at these short-term highs, then they get shaken out, and they buy again, they get shaken out. That's the way the market moves. Oil yesterday was the big mover to the downside, threatening a massive breakdown. And that could definitely hurt energy stocks, dividend stocks, because a lot of energy stocks pay dividends. I do see a comment here talking about uranium. Do we cover uranium? Let's take a look at URA real quick. And just a reminder, 65% of you guys watching this video aren't subscribed to my channel. So if you like what I do, if you like the insights and some of the tools I'm showing you, be sure to subscribe, click that button, click the bell so you get notified right away as soon as a morning video is posted or an update or some education on the markets, and hit that like button. Your feedback, as you can see, I'm active in the comments, and I want to create content that you guys want and need to learn about. So I will do that if I see enough people wanting the same thing. And make sure you share the video. If you like it, share it with others. If you find it useful, I'm sure you know others who find it useful. And this is the only way I know you guys actually like my videos and you want me to do more. And once I see what you guys want and that you like it, I can really focus and help provide more useful content and make the content even more useful than it is now. So I just need feedback and insight, and I need to see people wanting and sharing it. That's the way I know it has value. Anyways, don't forget to subscribe to the free newsletter. It is in the description or usually a pinned comment at the top. I will be modifying our newsletter, so you'll be getting some really interesting charts and short articles with some actionable charting opportunities and long-term investment point of views as well for some really unique positions. So that's it for that. URA. We do cover it and look at it and trade it in the band strategy, the best asset now strategy. But in the grand scheme of things, it's not always in favor. It has definitely been struggling for quite a while. We zoom way out. It was a sector that was out of favor forever. Nobody wanted uranium, which is a good thing. And it's come down and it is building a bottom. It's built a bottom. It's building a base and a launch pad. And it is down near a support level. So overall, it is in a downtrend. It's making a series of lower highs, lower lows, just based on this drop. If we were to go from this high to this low using Fibonacci extension and then back up to this high and carry it over, you can see it has had that 100% measured move. It's also at a major support level. This level here, if I just draw a line, obviously support, obviously resistance when you're underneath it. So there's no doubt it's oversold. It's having a knee-jerk reaction bounce. And that's the big question. Is it a dead cat bounce? How high is it going to bounce? Is it the start of a rally? No one knows this. So I know I get asked this all the time. And one of the questions in the comments yesterday was, how do we know if it's a dead cat bounce or the start of a rally? And we really don't. We need to let the charts paint a better picture. So the only way we're really going to know is when it moves up and builds momentum and builds a bullish pattern. That'll be one of the first signs. If it builds a bull flag pattern, we'll be like, hey, it's starting to actually show strength of a bullish chart pattern versus a bearish. So for example, this here, a move down, and this is a bearish short chart pattern, a bear flag pointing to lower prices. If we get an impulse move to the upside, a strong move, and it starts to flag and holds its ground versus just dropping right back down again like this, something that sells off, if it builds a bull flag, we'll be like, hey, it's starting to show some signs of strength. And eventually it'll start to turn into an uptrend, and there'll probably be more technicals supporting it and chart patterns there. But what I don't like V shape or W bottoms like this that are really volatile because they have knee-jerk reactions. This thing could bounce straight back up and then come straight back down. It could do this over and over again, and it's very difficult. And they are huge percentage swings. It really does take time. You don't want something to go straight down and straight back up and be like, oh, it's in a new uptrend. You need it to build and hold its value. You don't want to see drop straight back down. And uranium is difficult. It's all over the place. It's a pretty noisy chart. You need to have smaller positions, lots of wiggle room, meaning your stop has to be 10, 15, 20% away just to let the thing breathe and do its thing to try and stay within a longer uptrend. Anyway, all right, so what's my take on this? I think it's oversold. It's at support. It looks like it's going to have a bounce. The question is it going to be a bounce up to just resistance, or is it going to be a bounce higher and to the upper end of the range? We don't know. All right, well, let's see what else is going on. So money is flowing out of stocks today. It is flowing out of bonds as well. We are seeing bonds pull back towards the 20-day. They've had a really nice run. In the grand scheme of things, bonds are still trying to carve out a bottom. This obviously still a series of more or less lower highs, lower lows. You could argue here it's more sideways now, a stage 1 base, which is great because after stage 1 should come a stage 2, which is a bull market phase, which means we can take advantage of it, and it should go up while the stock market starts to top and roll over and provide opportunity potentially there. Where else do we have things? If we take a look at the put-call ratio, it's down 15% yesterday, but we did see it spike and open up above 1, and that was like signature move in terms of that exhaustion gap we talked about 2 days ago. Everybody was buying put options. They're all betting on the downside. And of course, when everybody goes in one direction, the market loves to go the other way. It's not when everybody goes in one direction. It's when the general masses, they're the last kind of hoorah or last push. Everybody just does the same order. They all just buy or buy puts or all sell their positions. And it's like this free flow of just pure panic. And that's usually the last people who get out at the absolute worst possible time. All right, so let's take a look where else. So the dollar is down a little bit today. I do want to touch on the dollar. The dollar has obviously been pulling back in the grand scheme of things. Let's look at the big picture of the dollar here. The dollar is obviously very noisy, very large pattern going to the upside, huge rallies and pauses, massive ranges. It is pulling back into more of the mid-range of this, and it has a series of multi-wave to the downside. Trump and the tariffs definitely shaking things up there. Overall, short term it is in a downtrend. Long term, I still believe it is in this big base, this new kind of launch pad, and I do believe eventually it's going to go higher. Long term, it is still in an uptrend, and that's what I'm focusing on. Now, I know we have a lot of Canadians, and they're watching the U.S. dollar fall like 1%, for the last few days over and over again, and people get. I know some of you are getting nervous about that because you hold U.S. dollars. So one thing I should share and point out is take a look. So if you actually look at the US dollar and Canadian currency, the Forex chart, we're still holding up. We're only down like a penny and a half from where it's been over the last several months. This is the monthly chart. We're not actually seeing the Canadian dollar fall. And because this exchange isn't really falling because the Canadian dollar is falling even faster than the US dollar. Keep in mind, the Canadian dollar typically moves with the price of crude oil. If crude oil is selling off, which it is, the Canadian dollar usually weakens. And if the oil breaks the support level, the Canadian dollar is going to collapse, is my expectations and experience. And that will continue. Even if the US dollar falls, the Canadian dollar is falling faster, which means it can keep this rate or potentially even go up if the loonie just falls out of bed and just gets hammered from falling oil energy prices. So that's something to keep in mind because I know this is on a lot of people's mind and watching the US dollar fall and they're like, we're losing value. We're losing 1% a day of our portfolio, but we're actually not. It's not really even budging over the last 3 or 4 months. It's got a little bit of noise in here, but the currency is continuing to hold its spread in the grand scheme of things. This is the chart of where I think the Canadian currency exchange is going to go. For those of us who are Canadian holding US dollars, this is the one to really focus on, not so much the dollar index itself, because the dollar index obviously is pretty scary looking. Like that recent pullback is enough to make a few people nervous. What else do we have here? Let's take a look over at gold real quick. Gold, we've got gold pulling back. What is this? This is not gold. Gold, let's go to daily chart of gold. Get rid of all these other charts here. Gold continues to hold up. Let's just take a look at the more recent price action. Use Fibonacci extension. So as we know, gold has these series of rallies, pauses, these bull flags, and it just had that big bull flag right after hitting our target. It had a very sharp pullback, high volume selling, and some other bouts of high volume selling throughout that wave. It had its consolidation, and now it's pushing up as that kind of blow off phase that I believe, and it's moving up. So if we take a gauge off this last bull flag and this run up and down to this last pullback that we saw, this tells us where we should see gold more or less go, which is all the way up to about, it's come up to this 61%, kind of hiccup through it a little bit here, and now it's kind of flirting and chopping around, building a bull flag through here, kind of similar to this right here almost. It's got, it's taking a pause, and then from here, there's potential we go up to that 3,050, 3,060 mark. That's the next upside target if you are long or trading gold. And we'll see how that goes. This last push up in gold might actually help really bring miners to life, which I do want to bring up miners. And I meant to talk about them yesterday because they do have a bullish chart pattern. And yesterday they definitely followed through. If we take a look at miners, I know a lot of you are in the miners. If we look at this move here, we've got this Fibonacci extension move and down to this low. I was talking to Craig Hemke about this on Sprott a couple of days ago, that if we take a look at gold miners, they do have this very nice kind of impulse move to the upside. This is the first pause in pullback, and usually the first pause in pullback can be bought if you're a swing trader and playing this. And this reversal bar, this exhaustion gap down to the 50-day, which is also, I'll just draw a line across here, also a very critical level. We had a gap here where price found, we had resistance, we had a gap here, plus it found support, it blew through this level, created another level. So this is a significant pivot zone. And if we do a Fibonacci retrace, we can also see this is the sweet spot between 38% pullback and 50%. In this box is where, if it finds support, is a bullish sign. And it has definitely found that. It got a lot of traction, really hooked up and took off yesterday. And so there is potential for this to rally. And if we look from where it is right now, it could go 6 to potentially like 15, 14% to the upside. And that would be a fairly significant move. Now, the only caveat here is if the stock market does continue to struggle and sell off, it will mute most likely the miners. Gold miners are stocks. They're stuck in the stock market. And if the stock market is trading sideways or lower, there's naturally going to be some outflow. Even though people are piling in here, there will be an outflow of stocks pulling the miners down. And that's why gold can freely continue to move up and hit its targets, while miners might actually just stay range bound or chop around and be very unstable and not perform well. And that's what we've seen in the past when we get into these scenarios before the 2008 crisis. Miners, they moved upwards and a slightly higher, but very volatile all over the place, where gold just kind of had a nice trend and nice patterns and hit its targets, whereas the miners didn't hit their targets, but they did grind higher. And I know people love to get into the faster moving things like silver and miners because they want to make more money, but they're not always the best opportunity and the most consistent or the best play for the market condition. And that's what half of investing is knowing what you should be trading given the current market condition, not what you like and what moves faster. And that is a very important, that's the differentiator between highly successful, I think, traders and investors and not. It's not about trading what you love. Trade what is right for the moment, for the market environment and volatility and all of that going forward. All right, what else do we have here? Let's take a look over at the hot list. If we look at the hot list, we do have actually, you know what? Let's go to natural gas. One of the members wanted to cover natural gas. Brian, this is for you. Big move up here in natural gas. Now, this is the daily chart. I'm just going to zoom way out so we can get the big picture of natural gas. So natural gas, we're in this scenario where it could be ramping up. Natural gas is known as the widowmaker. You can make a ton if you nail it. You can lose a ton if you fail it. And you just never know when this is going to go. I used to trade natural gas. I never trade it anymore. It's like trading the VIX, I find. So it's definitely not my thing. I don't pay much attention to it. But it does have multiple cycles. It just had a major cycle low. There's a 3-4 year cycle that you can really see just comes into place. And after that, we have potentially a big move. And it is primed and ready for potentially a spike. There's all kinds of things in the economy lining up for this kind of clean energy, this low-cost energy. Although natural gas, if it spikes up, will not be low-cost once it spikes up like it has in the past. But anyway, it is in an uptrend. It is showing signs of volatility, which means it's all over the place, but it is pointing to higher pricing just based on this recent rally and this pullback. You could see natural gas potentially moving up to 523, which is about a 17-18% upside move. So there is potential for a pretty explosive move. That's that first move. We could actually go back and take this bigger bull market phase and this bigger pattern, and then you can see where that goes. And surprisingly, this larger pattern, because this pullback was so deep, and this is why I don't like deep pullbacks, they do a lot of damage. The 618 ends up being a potential double top, and the 100% measured move is much lower. But you can see that sweet spot in here. So from 511 to 523, that's the next target based on this pattern and also based on this pattern. So when two patterns coincide with that, I'd be going for the lower one if you're going to pull some profits off, because it can get really close to those and then just come straight back down and you miss out. It's like very fast moving. But these are where the next targets are, 466, 511. And then from there, we re-gauge and see what patterns have unfolded from there. Now, Brian, I know you are HUN, you wanted TC, which is the Canadian natural gas. And if I was to insert the symbol here, UNG, and pull them together, just so you know, they are both natural gas ETFs. They both do the same thing. So you can look at UNG. If I talk about UNG or if I talk about natural gas futures, they're all the same thing. So you just kind of carry over what we have in natural gas to the natural gas ETFs in Canada. Now, ETFs don't move, especially for natural gas, exactly the same as the futures. Let's just take a look at the futures. They are tracking fairly nicely in this short time frame, but usually UNG and the other ETFs will underperform. You really do have to nail the trend, or else they tend to lose value over time. So anyways, that covers that. What else? Let's go to the hot list again. We have new triggers in the hot list. It is gold miners, silver miners, copper stocks, and wood, the lumber sector. So we are definitely seeing money rotate into defensive sectors. We're seeing precious metals and commodities, which is typically what comes to life near the end of a bull market when people are nervous. And I believe we are very close. Again, I have also thought that for a long time, but the markets keep moving as we expect, and we keep riding the trends higher. But until proven wrong, we have to stay long, but we can still understand that we are seeing waves where commodities, resources are coming into favor. And we're also seeing other defensive plays, IYR, real estate. When people are nervous, they don't know what to do. They usually turn to what at least they know and they already hold, and that is real estate. So we've seen real estate grinding up. While I don't really like this chart pattern, I believe it's broken down. It's coming into resistance. I believe everything is going to sell off eventually. It has been the favored play, one of the favored plays. Healthcare we've talked about has been moving up. It's starting to break out. This is a lot like our consumer staples pattern we talked about. It looks like this thing could pop and have another push up into these recent highs. Healthcare, no matter what happens in the world, we still need our health, so it does well when people are nervous. Consumer staples. Consumer staples have been moving up, very volatile. This one had its play already. We talked about when this bull flag was forming, and then we had this breakout right here. I said, okay, this looks like it's going to have that run up to the 100% measured move, which it blew past, and now it's trying to figure out what to do. And it's pretty volatile. Not a huge fan of that. This feels more like it's going to roll over and pull back a bit. Let's take a look at copper miners. I haven't talked about copper miners in a long time. They're pretty much in a downtrend. They're under the key moving averages. They're all sloping down. It's just a reaction bounce. Not a big fan of it at this point. What is IYZ? Is this communication? Let's just take a peek. Yeah, telecommunication. It seems to be holding up fairly well, having a bounce. And let's take a look at XLC, I think, is communication. And it's kind of doing the same, but I want to take a look at wood. I haven't looked at wood in a while. Wood is kind of out of favor, moving down. This is the lumber forestry sector. I mean, it did very well before. We were in a big housing bubble, but it is really struggling. You can see it's clearly like under resistance. We put in a major top. It's come up with this complacency move. If you guys follow my stage analysis and all of that, then you can clearly see we have a blow off top, and then we have more or less, it continued to put in a topping phase, and then it broke down, and now we've got this complacency move where people don't realize, they think we're starting something new, but it's probably the start of a big sell-off to the downside once it loses real momentum. It has poked to nominal new highs. It's got a bunch of mixed signals here. It's got higher highs, it's got lower lows, and then now it's got a series of a lower low here. It's got a series of lower highs. So it's kind of doing that saw blade where you work your way, put in the top and start to go down. And I think wood is going to slow down when the housing slows down. I was talking to a real estate agent yesterday, and he's like, yeah, nobody wants to buy anything. He says a lot of people want to buy, but nobody's committed, and everybody feels like the home prices are going to come down. And they're worried about tariffs and what's going on with the United States wanted to take over Canada, because I'm in Canada, so Canadians are pretty nervous about that whole thing. And so I think there's going to be a big collapse in housing. We know that already. We've talked about it. And of course, once housing comes to a grinding halt, lumber sales are going to come to a grinding halt as well. I think that is about it. I think we covered quite a bit, some unique, interesting angles today. And let's take a look at Bitcoin. I keep forgetting to cover it. I'm not interested in Bitcoin at this point. We did our one trade. We nailed it for that 40% gain from here to right up at that peak. That was the clean trade. And you can see after that, it's been nothing but noise and chop and volatility, higher highs, lower lows. This is why it's so important to, when you have that trade set up, we really just want to focus on this. This was the one big play based on the monthly chart that we did, and it needs to figure out what it's going to do. To me, it's actually looking pretty bearish here, simply because it has broken down. It's put in, you could say, a double top. It's broken down, and it's drifting up into resistance for a little kiss goodbye at resistance, and it could easily sell off. And if this goes down, we're probably going to see the NASDAQ and stocks go down. And of course, we had a lot of volatility that got people's attention right here, like a 12% gap up. Huge move. That's a news-driven move, which means it's totally fake. It's not sustainable. This is Trump swinging his weight around, making comments about the Bitcoin reserve, and everybody just quickly jumps and does an emotional trade. It opens up higher. Everybody gets into Bitcoin, and they lose their shirt. It's coming back up, but at this point, again, I'm not a Bitcoin fanatic, and I'm only looking for, it has to be something really nice like this monthly chart that we had with our last trade setup right here, where we had this bull flag pattern. We got in, and then we got out right here. We got out at 1,008.7. And we just wanted to play that initial move, that pop and break, and now the market needs to figure it out. If on this monthly chart, this builds another bull flag pattern, it could generate another play for us. We have the high, or the low, the high, and wherever this goes, this will project where those next moves in Bitcoin could be. But it does need to build up a chart pattern. We need to have that confidence that it's got the strength. And then eventually we will get in potentially somewhere here. And then we'll have that potential move to the upside again. That could be, 6, 20, 30% to the upside. But it really depends on where all of this shakes out. It needs to stair step its way up. And right now it needs to build a nice step or a flag or a pennant or something for us to be excited about potentially another strong play. Get in, make the money, get out, wait for something fresh. All right, that is it for today, and I will talk to you soon. Bye-bye.